once you buy your time back, it opens up the world to all the things you want to learn and do and get better at.
Hi, I'm Michael Hyatt.
And I'm Megan Hyatt Miller.
And you're listening to The Double Win Show. Today, we're excited to interview Justin Donald.
We really are. So Justin is a very interesting guy. So he's known as the Warren Buffett of lifestyle investing, and he's the founder of The Lifestyle Investor. He is the author of the best-selling book by the same title, and he hosts the Lifestyle Investor podcast and runs the Lifestyle Investor Mastermind. And this is so cool. He generated enough passive income to retire before his 37th birthday. I mean, if that doesn't make you want to listen to the show, I don't know what to do for you. He's been
That's so cool.
It's so cool. He's been featured in outlets like Forbes, Yahoo Finance, and Entrepreneur Magazine. He lives in Austin, Texas with his wife, Jennifer, and their daughter. And this is a great conversation.
It's a great conversation because he's one of the few people I know that is really living the double win at an extraordinary level.
Yeah, you're going to be inspired.
And he's also one of my personal coaching clients, so I have great affection for him. So here's our interview with Justin. Justin, welcome to the show.
Thanks. Great to be here with you both.
Well, I'm excited for you to meet Megan and for Megan to meet you.
Yeah.
And for us to talk about lifestyle investing.
Yeah, this is fun. Well, it's good to connect with you guys. I love what you do. I'm a big fan, and it's been fun working with you this year.
Yeah, I've loved it. Well, look, let's jump right into it. You retired before you were 37. You've got to tell our audience about that. That is so interesting and so extraordinary.
I know when I saw this in our notes about you, I was like, is that a typo? 37? Seriously?
Yeah.
Did you graduate college at like 12 years old? I mean, what happened?
Yeah, it sounds pretty crazy, but I just kind of figure out in life, paying attention to people that, were mentors of mine and people that I kind of modeled after that, most people kind of try to amass this huge net worth, and generally there's not a lot of utility in it during, the building years and often, even in the later years, because it might not materialize the way that most people think it will. But I had mentors that figured out a way to really just buy assets that had cash flow, that had passive income. And once you have enough passive income to cover what it costs you to live, then you're financially free. And for me, that happened before I was ever even a millionaire. I didn't have, I had, I would say, regular expenses. At that point in time, I was married. We hadn't had our daughter yet. So, we had any normal expenses that most married couples would have. I had a new home, a mortgage, but to figure out a way to, buy assets, whether it be real estate, whether it be, businesses, whether it be, when I say businesses, completely, hands-free though, with an operator, to truly have financial freedom. Not buying a job, right? Most people buy a business or start a business and it becomes a job, it becomes an extra job. I just wanted to buy assets that that would produce income independent of my time. I really wanted to, stop trading time for money. And so that was kind of what I was after.
Wow.
That's amazing.
That is amazing. I got a couple questions about that. Is any income truly passive? I mean, doesn't it take a little bit of work?
Well, I think that the way that most people would consider passive income, I think that there's a contingent that doesn't believe that this even exists. There's another contingent that they call a lot of different income passive income when it's truly not passive income. They're working for it. But there is a true passive income, and it generally comes from buying assets that can operate and produce with a team in place that's not you. In most cases, it is the person who owns the company. But to find some sort of assets that can operate without you, I think that's the key. Now, a lot of people start with real estate and they buy a property, they have some passive income, they buy another one, so on and so forth. And then all of a sudden, they've bought so much real estate that it's no longer passive. It has become active. It takes management. It takes a team. And all of a sudden, they're back in the grind again. So that exists. And, systems and people, can help solve for that. But newer people in the space generally experience the growing pains of scaling that real estate. But yes, you most certainly can have true passive income that produces on a regular basis without your time, energy, and effort.
Okay, so if that's the case, because I think this is a new idea for so many people, what does a day in your life look like as somebody who generates their cash flow primarily from passive income? Like what does that look like for you?
Well, the thing for me is I realized really fast it is boring not having something to work on, like something to be inspired by. But it was also a goal to not need to work. So for me, it was really a pivot from having to work to this shift of now I get to work, but I get to work on what I want to work on. So
Yeah.
when I was 37, I took that whole year off. My family traveled the globe. We went to 13 different countries and just had a blast. And I truly did not work. What I will say is I got really antsy at about 5 weeks. Then I got really antsy probably again at about 5 months. And, I really had to stay disciplined to just the things that I said I would do, to read, I really enjoy learning. So I like reading. I like consuming podcasts, YouTube's on topics that are really enjoyable. I really love to teach. I coached friends to financial freedom that year, several, a whole handful. And I really enjoy, just spending time with family, working on hobbies and projects. So it was a great year for me. And it took a lot of discipline to not just jump into something new, right? And I also like to invest. So I did some passive investments on the side. Now, there is a little bit of work that goes into the initial investment if you want to make sure you're doing a good job. But it's kind of like the whole idea of like time that you spend to do your due diligence and vet something. And then after that, it should, in many instances, just go on autopilot. A lot of investments, a lot of asset classes are not like that. But for me, I just wanted to build the ideal schedule. I love to work, but I love to work on what I'm passionate about. And I love to work with the people that I'm passionate about. And I just wanted to create a framework that does that. So for me, my hobby, which I kind of started and created at the end of that year off, being the lifestyle investor, it became a business, but I really kind of worked that business in the confines of a Tuesday through Thursday schedule. I enjoy digging into things. I have a team that runs the company and runs the brand. But I love having extended weekends. My Fridays are dedicated. My wife and I do a date morning, kind of like a date day every week. And then I hang out with friends and even new people that I want to meet. Monday is just open. I just don't book stuff. So I have an extended weekend every weekend. And that for me is just a fun way to live life. So I've got time to dig into things that are important, and people that are important. But I have a whole schedule that is built around how I prioritize and value my life, my relationships, my health, and so forth.
Before people think who are listening to this, oh, well, that's fine for Justin. He's obviously bright. He must be exceptional, but that's not for me. Is this for the common person?
Well, I think it can be for the common person, but it would need to be someone that's willing to put in the work. So it's not like this is something that happens overnight. A lot of people see, kind of where I am in my story. And, maybe there's this feeling like, oh, yeah, it's nice for you. But if people understood where I came from, that I came from a very blue collar family, I came from a family where as a college student, working a commission job, I out-earned both of my parents in summer income, like just to give perspective. So my parents did not make a lot of money. Wonderful parents, absolutely wonderful. But, we didn't live in, a super nice home, a super nice neighborhood. We didn't know, my whole youth, I think I only had one friend with a parent who was an entrepreneur. It was just a foreign world. So what I will say is for someone that has the desire to learn and the willingness to, step out into the unknown and get a little uncomfortable, I do think it's for anyone. I really think anyone can do it because my belief is that wealth creation is a skill set.
I love that.
I love that too.
I think one of the things that I like is that you didn't say, well, I came from money, so I had a nest egg or capital to work with. Like you had to start from zero, right?
That's right. My parents had me get a job when I was in 7th grade. They said, if you want to have, spending for extracurriculars, you need to work. So I started working in 7th grade. And believe it or not, I started going door to door, selling newspaper subscriptions and coupon books and all kinds of stuff. I mean, today I don't feel like parents would let their kids do that. I went to random neighborhoods, and this was normal back then. And so, that was my first job, but they got me started early, and really by high school, I could provide for myself for everything that I needed.
When we talk about the double win on this podcast, winning at work and succeeding at life, and we mentioned in your introduction that we have these 9 domains of life. One of those is money, and I think we think a lot about the connection between work and the other domains. If you don't have the work part of your life figured out, it's pretty hard to succeed at life because you're going to put all your energy into kind of basic survival. But I think money is a different domain than that. And I'd love to just hear from you. How do you think about money as enabling you to win at work and succeed at life, and particularly the way you've done it?
Yeah, well, money to me is just a tool. I think there's a lot of people out there that put too much of an emphasis on money, that it becomes too important, or it becomes the most, it's like the top of the hierarchy. And it's never been that for me. It's always been a tool. And I think that, the more value you can create in the world, the more opportunity you're going to have to be able to receive money. But I also think most people, kind of stop learning after high school or after college, and they don't teach money or personal finance or business in most schools in the US. It's now like, I think that there's like an elementary, and I say elementary, I mean like a very minimal personal finance class that's now mandated in like 30 of the states or 32 of the states or something. But I mean, for the longest time, even just years ago, it was not even half the states. It was like a third of the states.
Wow.
And so people don't have this understanding of money. And so the problem is, because people feel ill-equipped, they outsource it to someone else, hoping that someone else is going to solve all their problems. But the reality is that someone else also doesn't know money that well. And if you study the statistics over the last 30 years, over the last 15 years, only 5% of money managers have outperformed the S&P 500 index. The 15 years before that, only 4% did. Over that 30-year period of time, less than 1%. There wasn't the amount of repeat who actually did it for 30 years is next to nothing. And so I share that because for most people, they overpay to have someone manage their money to then perform worse than if they just did, one of the indexes. But then also the wealthiest people in the world have only a small allocation, generally 15 to 25% in the stock market, whereas most everyone else has the majority of their net worth in the stock market or in their primary business. Either way, it's pretty high concentration risk. So I think we just do a poor job as a society of outsourcing the most important things and not taking ownership, at least of like key foundational financial principles and guidelines.
That's really helpful. And I think a paradigm shift for a lot of our listeners, because it can feel kind of like the Holy Grail is you're in a place where you can hand that money every month, to your financial manager, and then you sort of check it off your list, but that may not be enabling the kind of freedom ultimately that you want. So let's kind of shift gears for a second and talk about some of the common traps, or basically where people go wrong with investment. You've already gotten a little bit into that, but tell us what some of those are.
Yeah, I think to be overconcentrated in any single thing is really challenging. You probably have a lot of entrepreneurs tuning in here, and entrepreneurs generally overallocate to their business. And I'm the first person as an entrepreneur to say it's important to invest in the business, but it's also important not to invest everything into the business. Just in case the business doesn't make it. And statistically speaking, it is likely it's not going to make it, right? Less than 5%, and mark the number of years. It's like between 1% and 5%, depending on how many years your company's been in business, that is the likelihood that it's going to succeed. So I think that's, kind of a big error. I think, our financial institutions, there are misaligned incentives amongst those who want your money and you as the investor. And I think it's important to get clear on what you want. I also think it's important to model after the people that have the track record. And I also think it's really hard to get ahead in truly efficient markets. So, if you think of the stock market, it is the most efficient market out there. And it's hard, if you're a trader, it's hard to beat algorithms and AI and these quants that have crazy degrees from prestigious schools that can make 1,000 trades based on their algorithms in the time it takes you to make one trade. It's hard to win in that efficient of a market. You certainly can invest in an index over the long haul, and most people have at least a portion of their allocation, their net worth in that. And the wealthy people then just borrow against it, and use that to buy alternative investments. I was actually just looking at UBS. They put out a family office report, which is the asset allocation. Well, it breaks down a ton of stuff, but they give the asset allocation of the wealthiest people in the world, the wealthiest people in the U.S. And this year, 59% of the net worth of the wealthiest people in the United States is in alternative investments, which means it's in investments other than the stock market, other than stocks and bonds. And I think most people don't realize that because of inefficiency, that's where the most opportunity lies. So in alternative investments, in real estate, and private equity, and private credit, and so this is kind of like a regular world, a regular space for many that are, in that ultra high net worth category. It's not alternative; it's the mainstay. The stock market is more the alternative investment.
Can you give us some examples of what passive income streams look like? Because I think real estate is the thing we all think of, but it sounds like you have a lot more, and I'd love to just make this practical and concrete for our listeners. Yeah,
there's a lot of ways to do it. We can start here with real estate. There are a lot of different types of cash flowing real estate. So if someone, we could talk about, I got started in mobile home parks, so that would be a big one. Multifamily, self-storage, industrial. There's tons of, rental, single family home rentals, anything that cash flows, that would be one. There's private.
Can I ask you just to clarify what you mean by cash flows? Because I don't think everybody will necessarily know what that means.
Oh, that there is cash left over for you to live on after debt service has been paid. So
it's profitable.
It is
right off the bat.
Profitable. Yeah. So, and one of my, in my book, I outline all these commandments. These are my, 10 commandments of cash flow investing. And really the one of the commandments is to get, one is to get cash flow immediately, because that de-risks the deal. Every time you get some, disbursement, whether it's monthly, quarterly, whatever the cadence is, that de-risks the deal a little bit more each time. And so there are deals that you can buy where day one you are making money above and beyond the debt service. And I don't really buy too many deals that don't cash flow day one, because they just tend to be a little riskier.
Okay, so real estate is one. What else besides real estate?
Well, private credit is a really popular one right now. And that would be, kind of the private side of bonds, right? So bonds is, you can get these on the stock market, right? Treasuries and bonds. Private credit is the private side of this debt structure where you're lending money, but you can have, a great return. It can be, fully collateralized. It can be more than, it can be 2 or 3 to 1 in terms of collateralization. So if something goes wrong, someone defaults, you actually can take over an asset worth more. So, and these are, paying anywhere from 9 to 20%, depending on the industry. But that's easy cash flow and doesn't require any work. There's tons of private equity opportunities, private businesses that you can invest in. I've done rev shares. I've done, just different partnership agreements, or I've had accelerated distribution agreements where I would invest some money, but I would be the first money paid back, or I'd be a majority percentage of the money paid back to de-risk the deal. And then there's a portion of the allocation after that. We bought a dog training company, for example, during COVID, because I noticed everyone was buying dogs. Mind you, I did not buy a job. This is where you got to be real careful. Most people buy a business or they start a business and it's a job, and it's you get these handcuffs and you can't really do a lot. I bought it with an allowance for an operator, and that operator, I brought in my friend who was making $65,000 a year in corporate America because the business previously was supporting a $75,000 operator. And so he got a 10% pay raise. I gave him a bunch of equity and he ran that business and we did a great job. It cash flowed. I had all my money out of the deal in 4 months. And then
wow.
every single month after that was just an extra distribution, but there was zero risk at that point. And then we sold it at a year and a day for almost a 12x. Because we tweaked,
that's incredible.
Yeah, we tweaked the SEO. We opened up the calendar for appointments. We increased, revenue and, the whole 9 yards.
So, do you get fascinated by those deals?
Oh,
I mean, just like,
yeah, I love them. I love them. They're so fun. And by the way, what I should also say, most deals are bad. I should actually begin all this by saying most deals are bad. Because I used to go into like investing thinking, oh, what a great deal. Let me see how we can make this work. And that's burned me. Now I go into deals and I say, I just taught this vetting deals course and created it with one of my buddies, Hans. And so it's not live yet. It's going to be live soon. We just recorded a couple weeks ago. But like the premise or the overarching thing is go into a deal thinking this is not a good deal unless you can prove otherwise. And then once you can, if you do, then pursue, whatever you would need on the due diligence and to fully vet it.
See, I'm thinking most people listening to this are thinking, golly, there's a whole ton to learn here. There's a whole vocabulary to learn. I didn't understand even all the terminology that Justin was using. And did you learn that by like reading a bunch of books or having mentors or making a bunch of mistakes and incrementally improving on each deal till you finally got it dialed in?
It would be a combination of all. I mean, I learned very little of this in my formal education, and by the way, I was a finance major and I hardly learned any of this,
Wow.
I learned a lot reading books. I learned even more having mentors, and I learned the most just doing it, just jumping in, unsure what I should do next and figuring it out as I went on and making mistakes. And I will tell you, most people, myself included, learn a heck of a lot better when they make mistakes. I mean, for whatever reason, the lessons,
I wish that wasn't true.
Yeah, I know.
I don't like that.
I wish that I could learn when everything went right as well, but and I do, but just not. I mean, it doesn't sink in as far,
Yeah.
I had somebody the other day said, "How can you charge so much as a business coach?" That would just blew their mind, and I said, because I made a lot of mistakes.
Got to pay myself back for those mistakes.
I failed my way to success.
Yeah. Okay, so you have 10 commandments in your book, The Lifestyle Investor, which, by the way, if you want to know more, this is your next step. Get The Lifestyle Investor. We'll put the link in the show notes.
I read it cover to cover. Loved it.
But of course, you can just go to Amazon right now and get it. But you have 10 commandments in there, and I'd love for you to talk about 3 of them. The first one is lifestyle first. What does that mean?
Yeah, so for me, I really wanted to create a book that was a blueprint to help people get out of the rat race, get off the hamster wheel, stop being a slave to time or money or their business or their job. And so, this commandment was first for a reason. Again, it kind of goes along the lines of, I don't want to buy a business that is in fact really a job, right? Like I want to invest in things that support my lifestyle or support the lifestyle that I want to have. So when I talk about things being passive, and you had hinted at this at the very beginning with your first questions, I really want them to be passive, and so some things may masquerade as passive when in fact they are really not. And so you got to do your homework to make sure you're not biting off more than you can chew. So for me, I'm not going to invest in things that are just not in alignment with, my values, how I want to live life, my family. In fact, one investment in particular, I had 3 partners. We were even partners, 33% each. And I was married with a family. They were both single. They were willing to work crazy hours, way crazier than I was able or willing to work. And I wanted to be home for family dinner every night. Like, that was important to me. So I actually negotiated with them. They didn't bring this up. I brought it up to them. I said, hey, instead of being equal partners, I'd like to right out of the gate say, I only want to be 20%. You each can be 40%. Because I don't want to have the same work requirements or hours as you guys have. I always want to be home with my family for dinner and spending weekends with my family. And so that would be an example of a deal that maybe I made less money on that deal. Now, it still ended up being a killer deal, and it was a great return. But I was willing for it to not be, because my greater priority was my family.
Wow. That's fantastic.
Really fantastic. You want to go to number 2?
Yeah.
Okay, so number 2 is reduce the risk.
So with reduce the risk, I have this really early. I mean, this is Warren Buffett is huge on this, right? This is his number one rule of investing is don't lose money. And so for me, I was like, okay, I know Warren Buffett. I've read all his stuff. He's incredible. How do I model after, many of these greats? There are tons of greats, Sam Zell being one of them, one of the reasons I got into mobile home park investing. So, people before me, I'm just trying to, even if I don't get time with them, I can read from them. They can be a mentor without even knowing that they're my mentor, right?
I think that's a big idea, by the way, because I'm sure when you were talking about how you learned to do all this and you're talking about mentors, people are like, yeah, but you probably have access to people I don't have. And I think that there's a common thread among people who have figured out how to succeed in different areas, that they find mentorship regardless of whether they're able to be in person with someone. I mean, actually, that's one of the biggest things I think, Dad, I've learned from you. This is way before the internet, way before Amazon, but you always used to say when I was young, somebody somewhere knows how to do the thing you want to do. And all you have to do is find them. And oftentimes the way you found people was through books.
True.
That's right.
And now podcasts.
And now it's so easy. Now you got YouTube, you got everything.
Yeah.
Oh, it's right at your fingertips. I mean, you probably remember this. I used to go to the library and check out a book. And I had a timeline that I had to read that book by before I had to turn it in before I got a late fee.
Where you had to pay your 25 cents.
That's right. That's right. And so, those were all my early mentors, Richard Branson.
Yep.
Many of these people I've gotten a chance to meet and spend time with, which is cool, but not early on. But reducing the risk is really what I learned from Warren Buffett. And there are a lot of ways that we can set up a deal so that it's a win-win situation. All parties win, but there's also a way you can set it up where you win even if the deal doesn't work out as planned. So, there's structures that I've negotiated in deals like put options, and not on the public side, even on the private side, where at any point in time, I can call my investment back. And there's a personal guarantee backing that investment, and I can pull it out. That would be, a great way to reduce the risk. So if the deal's trending well, you keep the money in. If the deal's not trending well, you've got this, little audible card that you can play and say, hey, I'd like my money back, and they've got to pay that full amount. There's, ways like there's several deals that I've done, and some of these in funds where there's collateral that is often, like in one fund that I'm in, there's collateral that's 10 times or more the value of the loan that's going out. So do you think someone's going to default if you give them $1 million loan, but the recourse is a $10 million asset?
Wow.
Right? So
makes it hard to know how to pray.
Right.
As an investor.
It puts pressure that you're going to honor the agreement. But if you don't, there's a scenario where it's easy to recoup what you lost. And so that to me is a great way. There's always a way to structure a deal that is safer than how it is laid out today or laid out on paper. And that's my goal, because losing money, it is so hard. If you lose money, you got to work 2, 3, 4 times as hard. If we wrote out the math, you'd actually see how it worked out. But, if you lose half of your money in an investment or all of your money in an investment, it actually takes years to get that back. So you're like way behind.
Yeah. So this is a really important commandment.
So I want you to ask you to be vulnerable here. What was the dumbest investment you've ever made?
Man,
I just want to feel better about myself.
I've got a few, and again, these are they're the most painful in the moment, but they're the single best, these are truly the learning opportunities. I mean, I've learned the most from these situations. So one of them was the first home that I bought in the frenzy. It was technically a condo, and it was, right before the housing crisis, right during the bubble, the highest prices. And then they came crashing down. And then I got this opportunity to move to another state. And so I rented this thing out, and it was negative cash flow because I never bought it to rent it out. And eventually it just weighed on me so much. And I finally sold it. I waited as long as I could through the financial crisis, but I mean, prices did not rebound. So my very first condo, I had to come to the table, I think, with like $125,000 or $130,000 to sell it. I mean, it was so painful.
So painful.
Underwater.
Totally underwater. So, I mean, that was a big lesson. And I mean, that has shaped my investment decisions on if I'm buying something that is a residential asset, and I haven't run the numbers for it to be a rental, I probably shouldn't turn it into a rental, And the other one is like, if I'm doing a rental, I'm going to use a different type of asset. Like that one wasn't the best one. It had, all different types of fees associated with it that, it was just hard to cash flow. And then later on, years later, I invested in a Ponzi scheme. And it was hard to know that this was a Ponzi scheme because the company, through this whole core process, we actually figured out the company was legit for 28 years, but it became a Ponzi scheme at the end of that 28th year.
Wow. Explain what a Ponzi scheme is for those that don't know.
Yeah, so a Ponzi scheme is where you raise new money from new investors to pay back old investors. So your business doesn't have the money to pay them back the way that they should. So you bring in new money to pay that back. And so you're just you're digging a deeper hole. And so, that was a crazy story. In fact, my updated and expanded edition of the Lifestyle Investor is about to drop next week. And so I actually can tell this whole story that I wasn't allowed to tell before because I was actually working with federal agents and federal prosecutors and had to show up in court and testify in court on this because I had all the information, that could incriminate this particular person. So
it's kind of like the opposite of passive income.
Yeah. Yeah.
Anytime you have to be in court and deal with federal agents, that's a fail.
But here's the thing. My attorney warned me, and I felt like I knew better than my attorney. I was like, yeah. You specialize in law. I get it. You're super careful. You're super cautious. I'm the investor. I've got this. Don't worry. And he warned me several times on several things, and I looked past them. But this is what, the Murphy's Laws for the Lifestyle Investor, which is a chapter in my book, is specifically designed from this scenario where I basically made a list of rules. It's like, these are the rules that I shall not break moving forward because I learned so much in that. It hurt. It hurt for a while. A long time. And then finally, when I pulled my head out of the hole, I said, okay, what did I learn here? And let's move forward and let's get better. And let's share it with everyone else so they don't have to make the same mistakes.
Yeah.
That what you just said, I think is so key and has been my perspective all along. Making mistakes is very expensive. And it's a lot cheaper to go to school on other people's mistakes than to make your own mistakes. Now, I'm going to make my own mistakes, but I don't have to make the same mistakes that other people have made. Yep. So that's the value of reading a book like Lifestyle Investor or taking one of your courses or joining one of your masterminds. We'll get into that a little bit later, but you can shorten the learning curve and get to that green pasture faster.
Yeah, certainly. And it's important, I think, also to learn enough from your mistakes that you don't make the same mistake again, right? So, as long as you learn the lessons in time, it is going to be, you can make it good. There's a silver lining to it, but you have to learn the lesson. If not, then it's for not.
Okay, so the last commandment that I'd like for you to talk about a little bit more is the idea of number 5, create cash flow immediately. You've already talked about that a fair amount. One question I'd like to have you answer in that context is, in our current economic environment where money is not as cheap as it used to be, how do you think about that as part of this creating cash flow immediately?
Well, we were in one of the frothiest decades and investment environments, in history, really. I mean, it was a crazy, crazy decade. People were doing things then that would not work today and likely won't work in the future. And a lot of people who were just a little too aggressive or a lot too aggressive in their projections and maybe in their optimism are going to pay for it here in the next few years. So it does exist. Like, you can still do deals today, even with high interest rates, where it cash flows today. I've done several of them, but you've got to look harder. You've got to actually, commandment 3 is an important one in this specific instance, which is finding invisible deals. So I'm just going to tie this one in real quick, because if you can, when I think about invisible deals, I think about, future trends. So what is like a trend that maybe it's starting now, or you recognize it's going to happen soon? Maybe, you're paying attention to millennials, since the largest wealth transfer in the history of the world is about to happen, over the next 10 to 20 years. And baby boomers are going to pass down somewhere between 80 and $100 trillion to millennials. So paying attention to their shopping habits, their recreational habits, the way that they like to work. I mean, these are all great ways to try to spot trends. And then another type of invisible deal is the one that's off market. When a deal's on market, there's a lot of competition. Price gets bid up. And this is what happened over the last 10, 15 years. Prices went through the roof. I would rather find a deal that's off market, so there's no competition, and I can negotiate directly with the seller, even if it's not on the market, even if they're not planning to sell it. Maybe find someone, and I've done this a few times, where they weren't planning to sell, but I made an offer. The timing seemed okay, and we followed through, and they sold it to me. And so I share that, all that with you, in the fact that if you want cash flow today, it's there. You may have to look harder. You may have to do better due diligence and vet deals stronger. And I would also say, be careful of the type of debt that you use to finance a deal like this. Seller finance exists on a lot of assets in a high interest rate environment. I've done a lot of those deals where the seller will actually be the bank and carry the note. But if you're using a bank and you're paying 7 or 8 or 9% interest, it's one of those things where you need to have the spread. You need to have a cap rate that gives you enough of a spread that in a worst case situation, you can still make money. And I think, the last 12 years, people did not take that seriously. They just bought whatever they could buy. Banks financed whatever people wanted. It was, people had their different pro formas. You should stress test and kind of create a worst case scenario for a deal. Most people didn't do that, or they didn't do a real worst case scenario. And so when this current scenario is in play, this current environment, their deal doesn't work. They're upside down. They're going to be foreclosed on. They're going to, investors are going to get wiped out. This is happening a ton. This is literally happening like crazy so far this year, and more is to come. But if you can figure out how to get the right long-term debt in place, and you can avoid floating rates, and you can find a direct seller that's not on market, you can still make good money on cash flowing deals. There are a lot of baby boomers that own these, that want to retire and are willing to sell them.
Yeah, and that's a huge thing too. You were talking about the biggest wealth transfer in history. It's a lot of these baby boomers that are trying to retire. And if our mutual friend Cody Sanchez is right, most of those people will not be successful in selling their businesses.
Yep.
So lots of them are desperate and very creative in terms of what they will do for you to buy the business.
Yeah, the world of opportunities is maybe one of the biggest it's been. So we could look doom and gloom and say, oh, interest rates are horrible and real estate's a lot tougher. And yeah, hey, you know what? These are true points. But I also think in these situations, some of the biggest opportunities come into play as well. Mm-hmm. You just have to be looking for those, not focused on what's not working. And yeah, there are tons of baby boomers that in some cases, they don't even think they can sell their business. They're just going to shut it down. So you can get it for a steal because for them to even get anything in their mind is a win. Or they want a number that sometimes these baby boomers are very irrational in what they want for their business. It's not tied to a financial metric. It's just some random number in their head that they want. And so sometimes this happens, where they want, 2 or 3 or 5 times too much. And it's like, all right, you're being very unreasonable. There's no way your business is worth this. But sometimes it's on the other side where they're like, I want $3 million, but the business is worth $5 million, and I've had that scenario happen.
Let's turn the corner and talk a little bit more about the double win. Now, most of the guests that we have on this show, I know maybe a little bit, but I know you pretty well because we talk every couple of weeks. And, I have had the privilege of having a front row seat to your life and your business. And I know that you take your faith seriously, your family seriously, all these things that are unrelated to work. I know you love to travel. I hope this is okay to say, you're a wine connoisseur.
Yes, yes.
And so how does this perspective serve the double win, sort of the lifestyle advisor or investor perspective?
Well, I think it's a great question. And I don't know how closely knit most of your guests are on this double win, but I feel like, with what we do and what, I stand for, what's important to me, it dovetails quite well into it because the whole business was created to support lifestyles, to support family. It was created to help other people, other people in our network, other people that have read the book, listen to the podcast, that are part of the mastermind, do the same thing for their family. So my goal is to be, really family and faith first and, work beyond that. Relationships are really important to me. And in fact, one of the things that we do every year as a family, my wife and I, is we do this marriage and family planning outline that we created that we share with everyone in our community. And it's a walk through, like making sure we're in alignment in all the values that are most important to us. I mean, clarifying what our values are and figuring out what we want out of life, whether it be dreams, goals, faith, family, education for, kids, for us, for, anything that we need to do to, learn, grow, become inspired. So yeah, I think the purpose for me in having the lifestyle investor is helping other people move from a life by default to a life by design with intentionality. And it's really served me and my family rewardingly well. So I like sharing it with everyone I can.
What I love about this is, I think for a lot of our listeners, they totally buy into the concept of the double win. They are, to the best of their ability, pursuing winning at work and succeeding at life. But because of what work looks like for them, if they're not working for themselves, or maybe they are working for themselves, but regardless, there are a lot of obstacles to freeing up the kind of margin they need to attend to the other domains of life outside of work that really matter to them. So, functionally, they're out of alignment with their values, not because they want to be, but because there are inherent problems within the work domain that prevent the kind of alignment that you're talking about. And I love what you're doing and what you're teaching because it gives people another option that doesn't just look like find a different job that maybe has a less demanding or workaholic culture in it or something like that. It's really about how can you design the income generating part of your life to align with your other priorities. And I think that money creates freedom and it creates the ability to have choices and more congruence between our values and how we spend our time, money, energy, so forth. So I think this is really exciting.
I do too.
A friend and mentor once shared with me that you have these two balls. You've got a glass ball and you've got a rubber ball. And the glass ball is your family and the rubber ball is your business. And most people drop the family, the glass ball, to prop up and support this rubber ball. But with a glass ball, it's a lot harder to restore that. And in some cases, maybe you can't. The rubber ball, the business, you can drop that over and over and over, and it's going to keep bouncing back. It may change shape, it may change form, but most people are protecting this rubber ball when they should be protecting this glass ball. And I think that resonates, with me. And I think no matter what you do, you can create your own boundaries of whatever it is, whatever the family fun time is, family dinners, weekends, you can do that. But if you have a job or a business that's not allowing it, first of all, it probably can. Try and get creative, try and figure out a way to do it. But secondly, if not, start working on building up that passive income so that the job becomes, it's not a have to. It's a like to, a want to, and you become a lot more courageous in massaging your role and responsibilities and how you show up when you don't need the income.
That's fantastic.
So good.
Thank you for just expanding our sense of possibility on that. I love it.
Yeah, me too. Okay, so we have a set of standard questions that we always ask our guests at the end, like a lot of podcasts do. And this is a lightning round, so we don't need a long, explanation. You're very good at being succinct. But 3 questions. First one, what's your biggest obstacle in this season of your life for achieving the double win?
Well, I think I have temptations just like anyone else where, a big deal, a big opportunity, a big partnership, creeps in. I'm also an Enneagram 7, so I love hanging out with people and I want to do everything under the sun. I want to travel everywhere and try every type of food. So I am constantly battling with what my wife so profoundly said to me, that when I say yes to other things, I'm saying no to the family. And I never looked at it that way. And so I am trying to guard better to not say yes to too many things that would take me away from the family.
It's really good.
So hard to do.
Okay, so how do you personally know today that you have gotten a double win?
Like, what are the signs of it?
Yeah, like what? How do you know I'm on the right track? This is happening.
Well, I think probably the best indicator, the best litmus test would be what my wife and what my daughter would say. And, we do check in on this regularly, and they do have permission to speak into what I'm doing, business, hours, that sort of thing. And I would say right now, our cadence is great. People are feeling really good about it. That doesn't mean that I'm that it's always that way. I mean, it's almost like this ebb and flow. And sometimes my wife does, take the time to say, hey, do you think that maybe you're putting too much into work, or there are too many social events? So right now I'd say we're winning and we're doing a great job, but I actually think their voices for this matter more than whatever I think.
I think you're right.
I love that.
Okay, last question. What's one ritual or routine that helps you do what you do?
Ooh, I
know you have a lot of them.
There's so many. Yeah, it's hard to pick one. Well, I love my quiet time in the morning.
What does that consist of for you?
Well, quiet time for me would be, prayer and reading and walking and just using my body, using my mind, using my spirit. That to me is really how I start every day, literally every day. I mean, I'm up hours before my family. So it's quiet and it's just a peaceful time, and it gives me energy. It gives me focus. It's so enjoyable to me. I love to learn anyway. So that to me is probably it. And just to throw in a little extra one, I would say peer group matters more than just about anything. Peer group and mentorship, and to put the right people around you with frequency is going to matter, to the direction that your life is headed more than most people realize.
Justin, thank you. I feel like we could interview you on most of the domains and you would be an expert because you've allowed yourself, or you've created this space for yourself to pursue things other than work. You've done an extraordinary job with your work and buying assets and all that income production. But I just love the way that you pursue intentionally God, your family, friendships, travel, all the Enneagram 7 fun things. I'm not an Enneagram 7, but I want to be. But at any rate, I'm just proud of you, and I'm so grateful that you came on the show today. Thank you.
Great to get to know you.
Thank you for having me. And I'll just say to everyone, once you buy your time back, it opens up the world to all the things you want to learn and do and get better at. And there's so much I want to get better at, and there's so much I need to get better at.
Wow.
Fantastic. Guys, you can find Justin and all that he does at lifestyleinvestor.com. And you definitely want to tune into his podcast by the same name. And he's got all kinds of resources, books, educational resources like courses, also his masterminds. Amazing. But something to check out. Just go to his website. You can find all that.
Amazing.
Thanks, Justin.
Thanks so much.
Okay, Megan, let's talk about our takeaways. And before we do that, I just want to mention 2 things. If this has been an interesting conversation to you, make sure you get the book, The Lifestyle Investor. Second, Justin has offered a free strategy session for anybody that's ready to kind of explore their options in investing. Like if you're ready to move beyond just traditional like mutual funds and stock market investing and do some kind of alternative things that, admittedly have higher risks, but also much higher returns, then you want a strategy session with somebody on Justin's team. And you can get that by going to lifestyleinvestor.com/consultation. lifestyleinvestor.com/consultation. It'll be well worth your time.
I kind of feel like I want to do that myself.
I know. Well, you can.
I know. I might do it. This conversation I found so inspiring.
Why?
I think,
I'm not that you shouldn't, but why?
well, I think first of all, Justin is very relatable, and you don't look at him and think, oh my gosh, you're some kind of, genius that I could never hope to do what you've done. Like he just makes it sound really simple, really straightforward, really doable. And I love that his focus is on cash flow investing, so that you're really using the profits of the business to do a lot of the investing that you're doing. I mean, that just lowers the risk so much. The idea that you're going to be cash flow positive just seems fantastic.
I like that too, because the kind of investing I don't like is where you buy a piece of property or buy an asset and then you get no return.
Right.
And you're investing in it again and again and again.
Right.
Without a return. But these are investments that cash flow themselves.
Right.
And the whole goal is to build up enough passive income that it could replace your current income.
Yep.
So you can basically do whatever you want. And that's what he's done. I mean, he
Yeah.
works 3 days a week,
That's so
Tuesday
cool.
through Thursday.
I love that. I love that plan. And I like that he starts with lifestyle first.
I do too.
I think that really goes along with our methodology and our philosophy of starting with the end in mind. He's not saying like, where's the biggest opportunity? And, could I live with what that means for my lifestyle? He's really starting with, I think lifestyle is another way of saying your values. Like he's really starting with your values. And then he's moving on to how do you reduce the risk and create cash flow immediately, all of which I think enable you to be aligned with your values and looking for opportunity, but also the other ones to reduce the risk of what you're investing in.
Well,
and how you're doing it.
And the fun thing for him is that he's able to spend a ton of time with his family,
Yeah.
a ton of time in personal development. He is growing like crazy just at a personal development level. But all that's made possible because of his lifestyle.
Okay, so I have a question for you. I don't
Okay.
think we talked about this on the show. If you were going to invest in, one of these sort of like boring cash flow positive businesses, what are 1 or 2 that you would be interested in?
Well, I'm really kind of intrigued by his origin story about mobile home parks.
Yeah.
Those sound like a pretty interesting investment. But definitely some real estate kinds of things. Also some hard money lending. Your sister, my
Yeah.
daughter, Mary, is big into that.
Yeah.
And so there's just so many alternatives out there
Yeah.
that typically financial advisors don't even bring to you,
Right.
right?
Yeah.
So this is the thing I like about what he's doing, and his mastermind sounds incredible. But it's a bunch of guys that get together and they brainstorm.
Probably not just guys, right?
Not just guys.
Yeah.
I'm meaning that in a generic
People.
sense. A bunch of people that get together and talk about alternative investments and Justin's team vets them. I mean,
that's cool.
Yeah, it's amazing, and gives them principles for tax strategies and investment strategies.
It's almost like a family office.
I know, and it kind of is. And they have a very strict kind of grid that they use. A profile that they want for an investment, so that they try to minimize the risk as much as possible. And they don't invest outrageous amounts of money. So if it doesn't work, it's not that big a deal. You got a portfolio, and you're looking at the performance of the entire portfolio.
Okay, you want to know what mine are?
Oh, is that why you asked me the question?
Yeah, I wanted to tell you.
Okay.
First of all, laundromats. I don't know why, but I feel like, first of all, you could make it so cute and like it wouldn't take a lot to stand out. And I love that idea. Number 2, nail salons for the same reason. And number 4, this is going to surprise you. Parking lots for truckers.
Right, you've given this some thought.
I really have. Like those are the things I'm interested in doing. And the amazing thing about the truck parking lot, and this actually came because I saw an Instagram reel about this, but you pay whatever you pay for the lot, like the mortgage on the lot, but then people pay you to park their truck or their boat or their RV or whatever there. And it just seems like so straightforward and simple. And I don't know, like running a business that's not nearly as simple as any of the ones I just mentioned. I think it'd be cool to have just a very simple, you got to do your laundry. Listen, ladies, you got to get your nails done and you got to have somewhere to park your truck.
One of the things I did think about as an alternative investment was opening up a real high-end gym that would have all the crazy equipment and the biohacking stuff and all the stuff.
Yeah.
But it would be for people over the age of 50.
Okay. I like that.
Okay. Yeah. So fit after 50.
Fit after 50.
So I don't know.
Don't steal that idea, folks. All right. Well, clearly we were inspired by this conversation. We hope you were too. It's just so much to learn.
I'm always inspired by people who are actually living it.
Yeah.
Who are practitioners.
Yeah.
And what Justin's lifestyle has made possible for him is, as I said, spending a lot of time with his family, but also traveling.
Yeah.
I mean, he travels more than probably anybody I know. But I think the thing that money does when you've got some extra margin is it affords you the opportunity to buy experiences, not just for yourself, but for the people that you love.
Yeah.
And there's a whole book I just learned about recently. I haven't read it, so don't send me mail about this, but it's called Die With Zero.
Oh, yeah. I've heard of that.
And the whole premise of the book is that you want to invest in experiences.
Yeah.
Instead of just kind of holding on to it, hoping, that you have enough to make it to the end of life and then you give what's left away.
Yeah.
So I don't know what I think about all that, but I definitely like the experience part.
I love that too. Well, if you guys have enjoyed this episode, we certainly hope that you have. Just a reminder, if you want to schedule your consultation with Justin, I might be right in there with you. Just go to lifestyleinvestor.com/consultation. And also, we would love to ask you to leave us a 5-star review. We are so passionate about the double win, winning at work and succeeding at life. But guys, there are a lot of people that don't know anything about the double win. They're just out there hustling, burning themselves out, and they don't even know there's another option. We want to get to those people so they have the opportunity to get the double win themselves. So if you leave us a review, that helps us by making this show, the Double Win Podcast, more visible to the people that need it most. And that we feel like helps us to fulfill our mission. So you can be right there with us, helping us fulfill our mission to make it nearly impossible for people not to get the double win. So leave us that 5-star review, schedule your consultation with Justin. Again, lifestyleinvestor.com/consultation. And we will look forward to seeing you back here next week.
See you next week.